What's up, good people? This is Larry Jones. To stay abreast on everything, go ahead and hit the like, subscribe, and notification bell. Well, Omicron didn't tank the market, but the Fed did today. As you know, stock market fell. We are not surprised. We are prepared. Let's look at what happened. Federal Reserve puts wheels in motion for balance sheet reduction. And so the Fed minutes came out, right? And it's a lot of people. I think it's a little bullish. It could be an overreach, but let's just get down to what it really means. Rate hike tapering ahead. As expected, the Fed policy making group followed the December meeting kept its benchmark interest rate anchored near zero. However, officials also indicate that they foresee up to 0.75 percentage point increase in 2022, as well as another 3 hikes in 2023 and 2 more the year after. That's really what they call hawkish. And it's a lot. It's just a lot. And of course, the market is not reacting to that quite kindly today. It is really, the market's really tanking. And I had everything taken apart, trying to reorganize some things here. And just like that, the market just tanked. And it's crazy. I mean, I'm looking at my portfolio just like all of you guys. And, you know, you go to work and you come back and you say, what the heck happened? All right. But we were not surprised. We were prepared for this. What does this mean? I am not, remember, anything I say is not a suggestion for you to buy, hold, or sell. Me personally, I am not running and buying dips. Okay, during this season, I'm going to warn you guys about buying every dip. This is not the type of market that we're in. This is not 2021, and it's definitely not 2020. We have to be very careful on what we do and what we pick now. Me personally, I think value stock are going to be the best performers. You know, if they're talking about all of this, tapering and in rate hikes, okay, because of inflation, and they're talking about 2022, 2023, and then 2024 possibly. I don't know. No one can tell you exactly what the market is going to do, but as it shows today, the market does not like it, and neither do I. All right. So what I want to reiterate for some of you guys, I'm going to play a video that I posted a few days ago about, for those of you that don't know what value stock is. In contrast, value investors look for a $50 stock that are actually worth $100 today. Now, in a few years, if the company continues its business plan, these investors are typically buying stock that are out of favor now and therefore have a low valuation. Here, I like this because it gives you some value investing and some growth investing, right? Company features. You see here what the company features are for growth, and you see it for value. Value stock grows slow, all right? Or not at all right? Growth stock, tech stocks, and these are products, right? So what are growth stock, tech stocks? You know what is also a tech stock? Teslas, EVs, those are also tech stocks. Like, that line is blurry. It's not just Apple and those type of deals, okay? And so the PE, look at this, the PE ratio is higher in growth stocks, which they are. You check all of the growth stocks, they are higher. And they're lower in value stock, right? So that's what we're going to look at. And then dividends are less often in growth stock, if not at all, and more in value stock. And then here's some samples. Amazon, as far as a growth stock, Amazon, Apple, Facebook, and they're more volatile. See, the volatility is higher with growth stock, but they're lower with value stock. Okay, we got to strategize. That's the word I'm trying to do. So we can have a strategy. And so now's not the time to operate in fear. Now is not a time to rush to either judgment or to start panic selling. Now is the time to strategize. Okay, so that's why I bring you guys the info that I do about the market and so many other great YouTubers out there. Stock Curry is another one that I haven't seen him in a while, but I saw him the other day. He does a great job of a market overview also, so we can know what's coming. Okay, and so these are the reasons why we do what we do, rotations. Reasons why we got into banking, even though they got a spanking today also. These are knee-jerk reactions, good people, when the market does not like what's going on. The market does not like uncertainty. And that is the thing. And the market looks towards the future. I think that this was very hawkish. And, who knows, but it's what they're thinking. But it's not written in stone that this is what's going to happen. And so what I would say is to get ready, right? We have to look forward to buying these dips. Now, this is not going to be a day, a week, or even 6 weeks of just finding a bottom, buying a dip. If we go into a bear market, which most likely we will, then we have to be extremely selectful. You're going to notice a lot of people are going to start talking about long-term investing right now because it's risky for even, swing traders right now. So me personally, anything I say is not a suggestion for you to buy, hold, or sell the stock. Me personally, I would not be just buying right now. And I definitely wouldn't be buying this dip right now until we find out what is going on. Okay. And I can tell you right now, without even looking, like I've told you before, if crypto is going to react off of this also. Okay. And so I'm telling you guys the correlation with crypto and the stock market. If you're only in a crypto and you don't care about the stock market, you're going to lose money. You need to find out fully what's going on. This is a game of chess. It's not checkers. Okay. And so we have to have the right pieces in the right places at the right time so we can continue to make money. So look for that look for these value stocks, and I would say prepare yourself to dollar cost average. I am not buying the first dip or the second dip or the third dip on the third day. I'm not. I am going to monitor day by day, let the market tell us what it wants to do and not based on our emotions. Okay, so I'm going to sit still. I'm still going to go with my plan, because my plan is, when this bear market comes, and it is coming, to be able to dollar cost average through the bear market. That way I am going to be buying some just before it hits the bottom, maybe, and all while it hits the bottom and on its way back up. But I am going to first wait to see if I could at least see some future of it clearing, because in a bear market, it could be dropping for months, days at a time. Okay. And I'm just giving you guys the reality of it all. But we are not operating in fear. We're going to dollar cost average. Make sure you check the video here. Make sure you check out all of the links below, good people. And we're going to get through this. All right. I'm still draining. I'm sorry. We're going to get through this, and we're going to be better for coming through it, because we're going to be dollar cost averaging in some of these stocks, and we're going to be buying them at discounts. All right, good people. We'll see you later. Live, love, laugh, and learn.